I have to say it's an intelligent-looking crowd. And when you hear questions like that, as a speaker, you instantly think you ought to be leaving through the back door, in case anyone asks you any specific stuff. I've been here before, presenting for Metal Tiger. I now am CEO of MetalNRG. Can you help me out a little bit? Could you put your hands up if you invest in natural resource companies at the moment? Okay, so a good half, maybe 60% of the audience. I am in trouble, definitely. Could you also put your hands up if you invest on the NEX Exchange? Okay, so a couple of people. Here we have a conundrum. The AIM marketplace, which we all know and love, or most of us know and love, has kind of given up on early stage resource exploration companies, which is what we are. Now, that presents a bit of an issue a couple of years down the line when the resource sector's booming, going great guns, the wider marketplace is collapsing, and the only place to really invest for the future is the natural resource sector, which tends to happen on a cyclical basis every few years. NEX is providing an alternative. Now, you can buy NEX shares through most of the main stockbrokers, but you have to pick up the phone, and we don't like to pick up the phone nowadays. We like to do it online. But increasingly, NEX is providing online services. So if you have a Share Deal Active account, which is the Jarvis platform, or you have a Share Center account, or you have a smattering of other accounts you can buy online. But if you pick up the phone, you can buy the shares quite easily. So we're traded on NEX. Our ticker is MNRG. We have been on that market for 10 years. It was formerly NRG. It stands for Natural Resource Gateway. But most people think it stands for energy, which is our current focus. We're an investing company. Now, on AIM, that means the regulator ties you up with your hands behind your back, and unless you can comply with very onerous class tests as a small company, which determine the nature and size, type of transaction you can do, then you can't do anything. Now, on NEX, they don't have class tests, which means that if you want to do a transaction that might be bigger than your market value at the moment, or the gross assets on your business, or the gross capital of your company, you can do it, provided you don't breach one of three rules. One is you can't change voting control. The second one is you can't change management control. And the third one is you can't fundamentally change your business. So I would implore you to look at NEX Exchange and the resource companies that are starting to emerge, because they are probably the future of the early stage resource companies. The presentation is very glorious and colourful. It was done by a gentleman called Burns. I don't know if he's in the room at the moment. He is at the back. If anyone wants a presentation doing, Burns is your man. He has wonderful pictures in here. I don't know where he got them from. This is a disclaimer. It means, quite seriously, do not listen properly to anything I say. Do not take any of it on board. Do your own research. Do not believe me. 90%, maybe more, maybe less, of the companies in our space, the management teams are desperate for you to buy their shares. And the reason for that is that they need to be able to raise capital on a regular basis to keep the overhead costs running and keep salaries paid. We don't get paid any salaries at the moment, the board of directors of the company. Until our net assets are in excess of £1.5 million, we will not take any money out of the business, apart from general expenses just to keep the business ticking. We have virtually zero office costs. We have the lowest overhead cost base I've ever experienced. And the reason is that unless we invest our £450,000 or so in something of value, then we won't generate any value for the investor base. So no main overhead costs in our business. This is the board. We have a mix of different people. We have a good degree of experience, good institutional access, good resource management experience, public company management. You'll recognize, if you're an active investor in our small cap space, Christian Shafaletsky from Eurasia Mining and Kibo Mining, and Gervais Heddle from Greatland Gold, and also Thor Mining. We have a nice mix of people with the right skills. Behind that team, we have consultants and advisors. You don't need enormous management teams in our small cap space. You need access to the right experts who can help and guide you along the way. When you see enormous boards with a cast of thousands, and then senior management teams on the website with another cast of thousands, you know a significant proportion of the amount of money the company can raise goes into paying those people. And that's not what you want. You want the money in the ground. Here's an analysis of our shareholding. Now, the interesting thing is, and it's a rarity, an astonishing rarity for natural resource companies on NEX or AIM or anywhere else. About 40+% of the shares held in the company are held by the board. And that means that we actually have a capital investment. If we don't make a return for investors, we don't make a return for ourselves, particularly when we don't get paid any money. Now, quite frankly, I don't do it for love. I have 6 children, one of whom is in the room at the moment. They bleed me dry, don't you, Hannah? And I have to pay the bills. So I need a serious capital return. Now, I'm a director of the company. I can't sell the stock. So I need to hand this business on to somebody else who will buy it off me, or hand a project onto somebody else who will buy it off me for a large amount of money that I can then distribute to the shareholders, and we're part of the shareholder base. And that's the trick. You're not buying these companies for love. I know we all enjoy investing and working through the various dynamics of a company, and we like the success when we win. But at the end of the day, we're about making money. And we never forget that. And you definitely never forget it when you're not paid any cash and you have 40% of the business. We have a relatively small number of shares in issue and a market cap of a couple of £1 million. So we're a relatively small company, and against the likes of MidaTech and many others, we are absolutely tiny. My job is to take us from a very tiny valuation to a considerable valuation without diluting to death the share capital along the way. We have, at the moment, a wonderful opportunity. The marketplace is full of resource projects that are dramatically underfunded. Many of them have been around for quite some time. In 2015, I was able to sign a deal for Metal Tiger over an asset in Botswana, where the company that had access to this asset didn't have $100,000 to sign the deal. Now, we had $100,000 because we made a bit of money trading Kibo mining a little while before, and we were able to write the check. And it was risk money because it could have gone wrong. That project today is worth tens of millions of pounds, however you value it. And it's T3 project, copper project in Botswana. So we are really blessed at the moment. Our sector is heaven and hell. It can make you a fortune, and it can lose you a fortune. Had you have owned Red Rock Resources back in middle of 2008, £1,000 would have become, within 2 years in 2010, £80,000. Now about 16 quid if you still owned it today. The sector cycles are astonishing. Now the key is finding the best opportunities in the marketplace when things are tough, and they're very tough at the moment. We have opportunities presented all the time. We've just signed some applications in Western Australia for cobalt. We think cobalt's an interesting area to invest our money at the moment. And we're looking in the United States of America right now at cobalt opportunities. Most of the cobalt in the world is produced in the DRC, which is not a particularly engaging geopolitical environment. The United States is different. You can actually do resource business in the States. Now, I've never done this before, and it's very exciting. Tomorrow morning at 7 a.m., when you're watching your news screens, I want you to watch out for an announcement from MetalNRG. We have a new deal being transacted, which gives us access to potentially one of the biggest cobalt markets in the world. We're a very, very tiny company, But we've just done a deal that could revolutionize the market price of our stock and the value of our offer to investors. And you have to remember that we're here to make money as quickly as possible. I'm very impatient. I don't like to hang around for years on end, because we have to find the opportunities that can add tremendous value. In the UK marketplace at the moment, we don't really have pure play cobalt investing opportunities. And with the announcement that we have coming out tomorrow, we are moving towards that objective. So, cobalt and energy metals. You've all heard of the battery technology and the cars that drive around the street and run you over because you can't hear them coming. This is moving forward with great pace. The Volvo has just announced a decision to move towards battery-powered vehicles full stop. They're building a battery-powered plant in South Australia to power a city. France is apparently implementing some rules and regulations to eliminate petrol and diesel-powered cars. I think by 2040, the world is moving to electric battery power. For that, you need lithium and you need cobalt. Lithium, there are oodles of projects around, most of them not really well advanced and not in the right place. You might want to have a look at Thor Mining for a lithium project in North America that's in quite an interesting area. Cobalt is different. It hasn't been as advanced as lithium in terms of the resource development. Now, cobalt has seen a dramatic increase in price in the last couple of years. Have a look at the chart for cobalt. It's probably, if you're a resource investor, one of the best charts you'll ever see. And interestingly, despite the fact it's risen over 100% in the last year in value per ton for the commodity, the intriguing thing is the supply-demand dynamics going forward are looking even more favorable. This thing could really carry on going, which is quite surprising after such a large price increase in the commodity. And then look back over time at the cobalt chart and have a look at where it's been to in the past price-wise, and it's quite astonishing. So, two things. One, have a look at NEX resource companies, and secondly, have a look at the price dynamic on cobalt and do a little research. Someone wrote to me this morning with some research that said the price of lithium and cobalt, or the demand, for lithium and cobalt, could increase by orders of magnitude in the thousands in the next couple of decades because of the demand on the commodities. Lithium and cobalt are hugely attractive areas for resource investors looking for significant increases in value, efficiently delivered through small public companies, which is why we are there. And there's the chart, which shows that in 2016 and 17, we're kicking into a situation where the refined cobalt demand is exceeding the available supply. As I said, most of the cobalt, just over half, comes from the DRC. You have China stockpiling cobalt at the moment. You have the American authorities saying that if there is a significant interruption to the DRC cobalt supply, it could fundamentally disrupt American business. This is a very, very intriguing area, and it's worth half an hour's research. Punch cobalt demand into Google, and the articles will come up. Now, the problem with a company like MetalNRG investing in cobalt is, if it was a fad, we might be able to spike the share price and get a bit of cash in, which is a common technique in the resource investing world. But for us to build a business, there has to be a fundamental supply-demand dynamic going forward that could favorably support or even increase the price further. And that's why we find this a particularly interesting area at the moment. One of the issues on the markets is the lack of communications from companies. There's a policy within all of the businesses I've been involved in. We communicate very regularly to market. We do that through RNS. I've been criticised in the past for issuing too many RNSs through the companies that I've run. But as shareholders, I don't think it's a good thing for you to have a large gap. I think you should find out on a regular basis what's happening in the company. And we work very, very long hours. in this phase of the cycle to build the projects, to build the business. And there's a lot of things to say. So you'll find the announcements from the company will be thick and fast, backed up by as many sensible podcasts and interviews that we can get in the time available. And we're doing one with Shares very soon, one of their video interviews. So there'll be plenty of opportunities for investors to increase their knowledge of the company and to engage with what we're trying to do. So there's our summary. It's very perturbing when you have the time available to you, the ticking clock just below your feet. We have a strong working capital position. We don't have much money. It's strong because we don't spend it. And because, as you'll see tomorrow, the principle of our business is to do as many deals as possible using our paper, rather than using the cash within the business. We have about £450,000. It's not a lot of money if you're spending thousands every month on salary payments and office rentals. When you're not, it's great. And when you can do paper-based deals, fabulous. We have a lot of shareholder support. I don't have any concerns in the slightest if I need to go and get some money. If we need to get cash, we can go and get it. It doesn't concern us or bother us. We have very strong shareholder support who will give us additional money if we need it. We don't want to raise money at low price levels. We want to build the business first. But we do have access to that cash. And if you run a resource company, I think 95% of the directors will probably put fundraising and finance at the top of their list in terms of concerns, and we are really comfortable with that. The securities are tightly held, 41% by the board. A significant proportion is held by investors who took part in our recent placing earlier on this year. And they're not short-term flippers. We don't do business with flipping organizations who will take the shares and then flip them for 5%, 10% profit. We deal with sensible investors who will properly support the business, hopefully buy the shares on the market after the placings, and will hold the shares and give us a chance to perform. We are at or near the bottom of our sector. No one has confidence. The market is being smashed on a daily basis. Everybody hates resources. And as good old Rick Rule from Sprott Asset Management will say, you have to buy when everyone is in tears and depressed and down. If you feel that warm, cuddly feeling inside, when there's tens of people, arms around each other at investor events, loving the moment, you should be selling your stock as fast as you can. When you feel an embarrassment, a bit like I do now, standing in front of you all saying, you know, we're going to build a resource company, and you look at your shares and your prices have been falling and it's difficult for people to run businesses effectively, this is the time, because we're on the turn, and this sector turns incredibly fast. And then the key is finding efficient transactions to make value for shareholders. Everyone talks about shareholder value, and I'm sure 99% of them really don't give a toss, because they want to keep their overheads covered, they want to keep their salaries paid, and so on. In Metal Tiger, we were able to find, or help find, one of the largest copper discoveries of recent times. When I worked with Greatland Gold, we turned Ernest Giles into an active exploration project that now has Newmont looking in detail at that particular gold opportunity. What we want to do through MetalNRG is find a superb deposit that has significant value, find it quickly and efficiently, and bring in the partners to drive the value forward, and ultimately crystallize cash that we can distribute to shareholders either through a disposal of the company or a disposal of the project. And that's it. I love this business, as Hannah will attest. I've spent far too long in the office over the last few years. But ultimately, the only denominator of success is the money that you generate for the people that buy your shares. Excuse me. And I don't care if you're Gladys in Glasgow and you put £200 into one of the companies that I work for, or whether you're Bert in London with 50 million quid to invest and sticking £500,000 in. Every single person that puts money into our business deserves the focus and attention of the management team. And as I've got 1 minute left, I give you an absolute promise that we, as a company, will drive our business efficiently, fairly, with Gladys and Bert equally in mind, all the way through the process, and try and make you the biggest amount of money in the shortest possible time, whilst accepting the risks that come with our exploration space. Thank you very much.
Okay. Do we have any questions for Paul, please? Any hands? Everyone's completely overwhelmed. Paul, I was going to ask, I don't know if you might be restricted by being an investment company, but you mentioned the trading business that you ran at Metal Tiger. Are you able to, or would you want to run a similar sort of, if like, trading desk within MetalNRG?
Not really, because it's such a pain in the backside. Metal Tiger started out as a small shell, and we had very, very little money. And then we put £150,000 into Kibo mining at 1.5 pence, and we had warrants at 3 pence. So 10 million shares, 1.5 pence, 150 grand. Within about 3 days of us actually sending the money over to Kibo, the share price went up 8 times. So we had a million quid or so overnight. Actually, in fairness, Hannah was with me. We were in Pret-a-Manger, just near Liverpool Street. And honestly, I saw the share price starting to rocket. And it was an amazing experience, because we planned to make money over 18 months and then start building project-based businesses rather than just investing, you know. Dirty traders to serious resource investors. In actual fact, we did it within a week, and it changed our business dramatically. It's a great thing to do, but people don't get excited. Investors don't get excited about it unless you have that kind of blowout, knockout success. There's more money to be made for investors by getting modest amounts of capital and picking the right opportunities, like the Metal Tiger Botswana deal with 100,000 US for entry. And then suddenly you hit the right drill hole. I think we hit 50 meters at 2% copper, and whoosh, off you go. That's the kind of thing that probably we need to be looking for, particularly in energy metals, where there are so many opportunities available.
Okay. And I'm going to ask questions all evening unless anyone puts their hand up. So if you have something to say, raise your hand and I'll shut up. Cobalt, scarcity of cobalt. You mentioned on the graph where the supply and demand. Is that based on kind of current projects in development and current producing mines, or are there other developments coming on stream in the next couple of years that you're aware of? Beyond the DRC, what's the general snapshot for the supply and demand for cobalt?
Okay, well, you got the DRC with about, I'm just trying to do the maths. I'm an accountant and I can't add up. It's the oddest thing in the world. It's about 55% of supply. And then it's split across many countries. China, the US, you know, Madagascar, and all sorts of different places. So I think really what's happened is the technology in our world has taken the market by surprise. And there was a lithium kind of buzz going around a couple of years ago, and lithium has had a huge amount of investment over the last couple of years, and share prices in lithium companies were really spiking dramatically. Then they had a kind of pullback of late, and now they're starting to recover again. Cobalt is still playing catch-up, really. Now, in Australia, cobalt has had a fair old run. In the UK, we tend to track behind what happens in Oz. So we haven't really had that many cobalt plays or cobalt runs. And most of the cobalt in the world, a significant proportion, is a byproduct of copper and nickel production. So pure play cobalt projects are not that common. And not many have been developed. Unless the market gets excited about something, it won't put funds into it. So the market, well, it's a bit like a share price. If a share price is a penny and clearly undervalued, no one wants to buy it. If its real value is probably 3 or 4 pence, and it's pretty obvious to demonstrate that. No one wants to buy it at a penny. When that price goes to 5 and 6 and 7 and 8, I'm thinking of selling my grandmother. probably would be a good deal because I don't have one. But selling my grandmother and investing everything I have, 10, 11, 12. Of course, people don't realise that at that point, the market's going short the stock heavily. And he's about to pull the price down in a tremendous tree shake to scare everyone out and get the shares back at half the price. It's the same with resource projects. Unless there's a buzz about them, you don't get the cash. But when there's a buzz, it's very exciting. There's going to be a buzz in the UK in cobalt. As there was with lithium, cobalt's coming. I think there's going to be a second buzz with lithium as well. And there'll be other metals and minerals that kind of come to the fore. Uranium probably will have its day as well in the not too distant future. But the money's coming in just about now in the UK, and there's starting to be a bit of interest. When we put out our announcement on the first cobalt acquisition for MetalNRG recently, the amount of Twitter posts, discussion board posts, website visits, blah, 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 shot up through the roof. And it was a tiny announcement. Okay, the ground's very good, very, very exciting. We didn't release much information about it. We just said cobalt applications, and we didn't want to publish information because we wanted to peg around. So we didn't tell people where it was, and it's great. It's very exciting. When people find out, they'll love it. But a tiny announcement with a bit of cobalt in there, and all of a sudden, everything happens. Our stock hasn't traded for months and months and months, but our first tiny announcement about cobalt, and suddenly we have 4 or 5 solid trading days when people are buying and selling the shares. So cobalt is playing catch up. The projects will get many and varied over the next few years. But what's been missed dramatically is the impact that the new technologies will have, and the fact that we will all be driving around in electric vehicles. Probably not in my case, but in Hannah's case, because you're a tiny bit younger than me, which I feel terribly jealous about, but in Hannah's case, there'll be flying vehicles probably powered by the same kind of or similar batteries, but more advanced. And the market for commodities has missed it. And these are the areas where I think investors can make the most money if they're able to forward predict the supply demand and get into these tiny companies at this point in time. There's a tremendous opportunity.
And you also mentioned something I've also looked at a bit, without trying to explain price manipulation of smaller resources companies. A lot of smaller companies who have cash flow issues, as you explained, and there do seem to be online all sorts of vested interests. People are trying to promote one company, selling it, and it feels like it's, as a group of companies, it's a bit scary. You don't know who's doing what behind the scenes, if there is manipulation, or if there's people who aren't playing with a straight bat. Do you see that having any? I mean, I'm not saying that's how you run your company, but on the sector overall, it undermines confidence in smaller resources companies.
Well, it does, but how else are you going to do this? If you think about it, if you're a resource, sat where I am, knowing the projects we have, at this stage in development, there's a 1 in 1,000 chance that we're going to have a mine. Okay. The risk is astonishing. And I have to come and stand in front of you as a resource company CEO and get you to buy my shares. If I give you the truth, I'm doomed. You won't buy any shares in my business if I tell you it's a 1 in 1,000 shot. Now, I can convince you maybe I can reduce the odds, and you can with the best people. If you focused on your resource exploration and finding good projects and bringing in specialists and paying for them and not paying yourselves, you have a really good shot. But the reality is most companies are focused on salary and focused on keeping the business running. They're not really focused on share price. And we live and die with our 41% by share price performance ultimately. If I want to do this again, I did promise my wife I would stop doing this kind of business because it ends up being 80, 90-hour weeks and I never go home. But if I want to do this again, I have to perform. If I don't perform, no one will support me. So, but if I'm a general investor, I have to, a resource company, I have to wave my arms about. I have to encourage you with the story. The reality is the vast majority of companies on AIM are going to lose your money. The vast majority of resource companies on AIM over the full cyclical kind of twists and turns are going to lose you a dramatic amount of money. You have to get your timing right. You have to be in at the right time, near the bottom, and out at the right time when it's getting a bit frothy and everyone's getting excited, and when everything's in the Daily Mail. Yeah. I lost 800 quid in 2000. Didn't have an awful lot of cash at the time on the tech shares. Had to apologise to my wife, Hannah's mother, in the garden for losing 800 quid. And in fairness, she said, what are you worried about? Keep going, you'll learn how to do it eventually. And I didn't know whether to say that positively or negatively. But get your timing right. The market is not straight. It's not supply-demand on our market. We have a market maker system. Share prices move up dramatically or fall dramatically, probably for a reason unconnected with the underlying supply-demand of the stock. The market makers are there for a reason, and it's not for charity, it's not for the benefit of society, it's to make money. They're going to make money off you guys, not off me. Understand that the people who post on discussion boards and Twitter and all the rest are there for economic reasons, or they're mad. Because why on earth would you post on a discussion board unless you had an economic interest? I mean, you know, time to time, maybe, a general comment, but these persistent posters that you see, or Twitterers that you see, tweeters that you see, they bother me if they're there for non-economic reasons. So ignore them because they're nutters, and focus on the fact that most people are there for their own economic benefit, whether they want share price up or share price down. I like the private investors on these forums because they wear their heart on their sleeve. They buy shares, they want them to go up, they're enthused, they're positive, and they might get over the top, but at least you know where they're coming from. 90% of the negative posts that you see on discussion boards and Twitter are there from organisations and other people who want the share price to move down for a reason. So just be careful and cautious. We're not in a fair marketplace. Somebody asked me very recently that what's the most important thing from my perspective that in terms of buying and selling shares that you could actually take on to protect yourself. And in fairness, there's lots of different factors with individual companies, but the most important thing, I think, is to understand the market on which you trade. And we have a market maker-based system. In Australia and Canada, they don't. They have a match bargain system, electronic computer stuff coming together and matching buyers and sellers. In the UK, it's very different. We have middlemen, market makers, so you have to be cautious and careful.
A question at the back in the corner, please.
I thought I got away with it.
No.
I'm not very familiar with the market you're trading on, but could you tell us what the typical buy-sell spread is for your shares, and what size of shares you could actually purchase without spiking the share price?
Yeah, in terms of the spread at the moment, it's 1.5 to 1.8. So I'm losing my voice. 1.5 to 1.8, mid-price, so 1.65. Typically, there haven't been that many trades because only a week or so ago we released our first news and we started to get a bit of trading happen. The sells were coming in around the 1.55 average and the buys probably around the 1.7 to 1.75. So trading within the spread. There is quite sensitive at the moment because there's only one market maker, which is winter floods, which always happens on these very small plays. You just get the one market maker doing it, and then as you start to get a bit of volume, the market makers increase in number. So we have to increase the two-way trade of the share. We have to reduce the spread of the share, increase the number of market makers, and that's all part of building the awareness in the company. So with modest, sensible buying, you're okay. Modest, sensible selling, you would be okay, I would say, going forward. If you really went for it, I think the share price would react quite violently one way or another. And we have to deal with that, as I've had to deal with in all the companies I've been involved with, in fairness, in terms of getting the traded balance to a more sensible place.
Okay. We'll have one more, and then that's it, our final one. Sorry, Pete, just sat down there as well.
Just to make you get up and do some exercise. And a very quick question. I mean, I know the Canadians are getting very excited about cobalt, have been for months, given that they have a town called Cobalt where they used to mine it, particularly. So there are a lot of promotion on the Venture Exchange in Toronto.
Yeah.
But looking more on the supply side, I know you're kind of discounting DRC as somewhere we might want to invest, but Glencore is reopening Katanga. I think it's Katanga that will begin with K next year, and that's going to bring about 20% more cobalt into the market. So, I mean, should you really be discounting DRC?
I think when it's something like 169, I might get this wrong, 169 out of 174 on the geopolitical risk list, then there's obviously some concerns over the supply. It would be a phenomenal event in terms of cobalt companies if there was a supply disruption for a material period of time. I don't think we'd want it, given all the number of cars and battery-powered devices that we need to have in place. But I think even if you assume that the incoming supply is reasonably robust, and if you assume that the current supply is reasonably robust, there's still a very strong argument for supply deficits for the foreseeable future. And as the sector really begins to ramp, it will have an exponential growth curve, and then you've got some real potential. But it doesn't really matter in the scheme of things. When we're at our stage in development as a small company, we're driven dramatically by investor sentiment, and we are a play on sentiment at 2 million cap. We're driven significantly by what the companies are doing around us, and a lot of the companies are starting to re-rate and move up price-wise. Now, it's important to build a sensible business that we can dispose of by having the right commodities in the portfolio and the right projects. But in the short term, it doesn't really make too much difference. I think if the sentiment is with us as a small cap focused on energy, metals and minerals, we got a decent shot.
All right, Paul, thank you very much indeed.
Thank you.